Australia's biggest software maker posts a 20% drop in profit. Billabong's net income fell to $59 million US. A big part of that is because U.S. consumers cut back spending. And for more on those numbers, what's ahead for the company, we're joined now by Derek O'Neill, his Billabong International CEO. Derek, quite a substantial decline in your numbers, but you're not too concerned. You're pretty happy with it.
Well, I mean, we're a company based here in Australia, and but we operate in global markets. I think there's a lot of currency that's moving a lot of different things around. If you look at some of the absolute numbers for us, I mean, we still saw revenues grow about 23%. Our EBITDA was down only about 2%. Overall, when you consider some of the recessions going on around the world, I think that we did quite well, and our margins remain world class and held up quite well.
Let's take a look at the markets around the world, as you put it. I mean, the U.S. in particular. I mean, I have with me our guest today, Hans Gerty. We had a discussion on consumer spending, and he's not convinced consumer spending will return anytime soon. Your thoughts on that?
Look, it remains very difficult to see. There's definitely been changes in consumer spending. The interesting thing is that I think there's just as many people out shopping. It's just at the moment they are wanting to spend less. We are seeing a little bit of a shift. Over the last 8 or 9 months, people have been very much price conscious. We're seeing now that more fashion-driven styles are becoming a little more popular, and price is not so much of an issue over the last sort of 4 weeks. But I agree that consumer spending has changed. It remains difficult to see if it's going to get back to where it was anytime soon. And I think while we remain prepared for any uptick in the consumer cycle, it just remains a little foggy to see when it may come.
What's the plan now? What's your strategy to rebuild profit margins going forward in your businesses?
Well, if you look at the U.S. market, the U.S. is approximately 50% of our global sales. We've been looking very closely at cost controls in our U.S. business. We've still seen some revenue growth in the U.S. business. We're not planning a lot of revenue growth in this year, but you should start seeing the benefit of those cost controls come through in margins. So we expect to see some improving margins in the U.S. this time around. But we also have markets like Europe that are growing very strongly for us. Germany, double-digit type growth. Even Japan over this last year had strong double-digit growth. So, we operate in a lot of different places. Our company and our brands are still fairly new for a lot of consumers. So we think there's still a lot of opportunity, albeit that it just remains difficult to predict the consumer. So it's a bit of a month-by-month proposition.
You said that habits of consumers have changed. What's selling well right now?
We're seeing a bit of a shift in the U.S. market, for example, even though, you're right at the tail end of summer. The stores are full of winter product. We're seeing, good movement in things like, wool line jackets, a lot of lined woven products, plaids, sweaters are coming back. It's moved from a hooded sweat look to clean sweaters. There's a lot of things going on in denim. It's actually good when product cycles move and trends move, because you get an opportunity to get a lot of new fresh product out on the marketplace. So the good thing about it is that next week it's going to be nothing like it was last week, and for a company like ours, that's good.
And thank goodness for that. Derek O'Neill of Billabong, thank you so much for joining us on the program.